Alright, hello and welcome to Camel Finance. I'm your boy Camel and we've got some big news today. Look at this, the Fed pivot as of yesterday was trending on Twitter. I said right on schedule. Let's see what happens. Since then, the dollar is toast, okay? The Fed will never be able to finish their rate hikes. They never do. This guy and I am expecting the Dixie parabola to collapse and cryptos soon to soar. I also expect yields to come off. We'll get to the charts just shortly. For now, I wanted to point out a couple of things. Look, the Bank of America is warning the United States Treasury market is at risk of a large-scale forced selling. The world's biggest bond market we're talking about, remember, keep an eye on Japan. Why keep an eye on Japan? Well, because the Bank of Japan is conducting emergency bond buying operations. What does this mean? It means the printer is spooled up at full speed, printing money, freshly printed money used to buy the bonds, just like we're seeing in the UK. The Bank of Japan is selling dollars for Japanese yen to try to defend their currency, whilst printing Japanese yen to perform yield curve control. This is where, like I said, they print the money and they use it to buy bonds in order to bring the yield down and defend their bond market until they run out of dollar reserves and then begin selling US treasuries, which will cause the US treasury yields to rip higher. What a show. What a pony show. And what does this imply? Well, if treasury yields are going to rip higher in the middle of the Fed hiking cycle, then the Fed is going to have its hand forced, and they know it. They know it. I will get to this and prove this to you in just a second. Remember, as these yields rip higher, they are going to be forced to do exactly what the UK has done, where they turn the printers on in the middle of a hiking cycle and try to perform yield curve control, just like Japan are doing right at this very moment in time. Here we go. The Treasury in the UK is transferring billions to the Bank of England to cover losses from QE, and people are only just making jokes about the Prime Minister lasting 45 days. Think for a moment. Think. And I wanted to point this out, that our Prime Minister's left, okay? Everyone's very quick to point the finger at poor Liz here. Now, I am not pro-Liz. I don't even know who she was, to tell you the truth. It took me a week before I found out she was the Prime Minister of the country. She'd been running this country for a week before I even learnt of this information. I have no political stance. I do not follow politics. But I can tell you one thing I do know a lot about, and that is central bank policy. That is how QE works. That is how inflation works. And I can tell you for fact, no one person can come in and make a bunch of policy changes that have an immediate impact on the economy. Any change to an economy lags 6, 12, 18, 24 months, depending on what change. It takes a long time for freshly printed money to trickle through the system and for inflation to make its way into the economy and into the lives of the average everyday person. Whilst everyone is very quick to blame Liz, I think it's important to point out that this is likely a smoke and mirrors show to keep your eyes off of the central banks. And of course, the central banks and the Treasury, it is them that are printing the money. It is them that are trying to perform yield curve control. Okay, it is these people that they do not want you to be looking at and saying, hold on a minute, I need to exit this system. All I'm saying is, doesn't it strike you as a strange coincidence that right around the time the pension funds get margin called, right around the time the Bank of England has to perform emergency yield curve control by freshly printing money in the middle of a rate hiking cycle, doesn't it strike you as a strange coincidence that right around the time the wheels start coming off of the UK, we also get this puppet master at front and center for everyone to point the blame at? Let's keep going. The Wall Street Journal is reporting that the Fed will hike 75 basis points in November, but is now considering a smaller hike in December. Here comes the pivot. And it gets better, ladies and gentlemen, because the Fed are telling us that they are at or near their neutral rate. This is it. We are about to see their hand forced. I've been talking about this happening in September, October. Maybe it comes slightly later, November, December, but we are very close now. You can see here, it's important that we slow our rate hikes. They are telling us this ahead of time, aka work our way towards a Fed pause. This Fed pause is going to be here in a couple of months or less. They're also telling us that they're going to step down, not necessarily a pause straight away, but they're going to do 50 or 25 basis point increments. The markets are forward looking. The stock market will rip higher, as will crypto, on this news, because this signals the end of their hiking cycle. Over here you can see the target probabilities for the November 2nd meeting. Just like to point out, this meeting, just days after when we are due a cycle low in equities, and just days before we are due a cycle low in the Bitcoin market. And the market conditions currently are pricing in a 95% chance of a 75 basis hike. But what happens if we see less than that? What happens if they announce that they are going to start hiking in smaller increments like they are already kind of priming for? What happens if they tell us they're going to pause rate hikes? Okay, they're going to have their hand forced. And what happens if they have to do what the UK or the Bank of Japan has to do and perform yield curve control? If Japan starts to sell treasuries, the yield will spike and the Fed will be forced to print money to perform yield curve control. Ladies and gentlemen, the markets are forward looking. They are going to price this in and we are going to see this melt up. I can smell it. We're so close now. We're going to be long and strong. This is going to be a great time. Remember, the goal is to keep the expansion going as long as physically possible. I believe there is one last leg higher where they're going to let Congress out at the top and then we're going to see this depression. But first, there's a lot of money to be made. I am sure of that. Many think the 10-year has a long way to go. Miles himself thinks he's nearly done. I think it's got a long way to go, but I think it's got a long way to go down. I think this is what we're going to see. I think we're going to see this move up to 4.5% and then perhaps we're going to break this trend line. That remains to be seen. One thing I do know amongst all of this is Bitcoin continues to thrive. Adoption continues strong. The Lightning app, Strike, has been featured in Times Square, New York. Nigeria, the world's leader in Google searches for how to buy Bitcoin. This thing is truly global. And here in Canada, you can see Bitcoin's candidate for Prime Minister is ahead on the latest polls. Wouldn't this be a complete 180 relative to their current Prime Minister? The British pound is almost as unstable as Bitcoin. Think about that. We are seeing the wheels come off of this system. We know they're going to continue to break the bond market and the fiat currencies. We know that they're going to continue to inflate them so that they can force everyone to accept the CBDCs. Better opt out and you better do it quickly. Meanwhile, Bitcoin miners, they're always the people that know the most, okay? They are always the insiders, and Bitcoin miners are extremely bullish. They're extremely bullish because the hash rate to mining revenue ratio has hit an all-time high, meaning they keep investing in infrastructure despite very small Bitcoin mining revenue. They don't care where the price is because they know where the price is going. Historically, miners are underwater in the short term, but have never failed in the long term. Here we go. Double bottom, bear market, just like the fractal above. Peak, peak, fake out, into a double bottom with a falling wedge, and then we go. This is exactly what I expect to happen over the coming days. We are incredibly close. A lot of people are very bearish, and I believe this to be a mistake, as I've been saying over and over again. Let's get into some charts because the dollar is off. Look at this. The dollar continues to do what I expected, which is chop around here. I think we're going to have a test here. Would some level of reaction off of this line be reasonable to expect? Yes, I think there will be buyers to come in and bid the market at this. I don't expect us to just crack straight through this red line, but we've had our first warning sign. We've had a retest, a second retest horizontally, and now we're working our way towards this red line here. I think we're going to get some level of reaction off of this, and then potentially I think we can see this break down, particularly as we know that the Fed pivot is now in sight, only weeks away most probably. We can see equity markets starting to sniff this out. We are continuing to see this sort of fractal that I've pointed out many times. We're continuing to see this sort of thing play out. So the question is for me, did we get a painfully early cycle low here? I think this is too early to call the cycle low. This would only day 27. This one, day 33, still too early. For me, I'm hoping and praying that we can get one final drawdown, one final pullback into what I would consider the daily cycle low, and then we can go. Of course, if that doesn't happen, I cannot force the market to do what I want. If we do not get a drop from here into the cycle low and we just blast straight through this upper trend line, then it becomes a breakout trade. Okay, so just so you know, I am here, I am primed, I am ready. I have been patient for weeks and I am now ready. I am hoping to see one last drop down, call that the cycle low, jump in there on a swing, and then we take this trade to what I believe will be new highs. I believe this will be new highs. Am I saying we're going to go up there straight in a straight line? No, I'm not saying that, but I do believe new highs are coming. I believe a melt up is coming, and I believe the most painful and hated rally is coming. I believe at the top of that rally, they're going to let Congress out of the top, ban them from owning stocks, and then we go full Great Reset, Great Depression. That remains to be seen. For now, one day at a time. NASDAQ, look, breaking out, trying to follow the Dow. The Dow is out and pushing up, so perhaps we're going to have to entertain taking breakout trades here. If we do not get a big drop on Monday, then we're going to have to call this the early cycle low, day 33, one of the 20% of the times this occurs, and take the breakout trade. NASDAQ, potentially you're looking at breakout retest resumption. Potentially you could also move this trend line up a little bit. Either way, it looks to me that it's broken out. So is it time to long the NASDAQ? Hopefully get a retest. If not, long above this line here. Hopefully we can get the pullback. We'll see how it goes. Dow though, look at the Dow. The Dow is leading. The Dow led on the way down, remember. Now it's leading on the way up. UKX, I think this could be a long as well. We'll see if we can get one more drop down and then go. Maybe it will come from here. Again, we need to be paying very, very close attention here. Coinbase, all the Bitcoin miners, so Coinbase, MicroStrategy, and then the Bitcoin miners, Riot and Marathon. I think these are all coming into focus. Again, these cycle lows are not due for an additional week or two. So we're getting very close. We'll start scaling in at the end of next week. Patience will be rewarded. Just looking at Tesla. Tesla's still not out. Apple is out. So are we looking for that retest now and resumption? Yes, or a break above this line, and I think we can get in here. Stops will need to be wide if we have to get in here, of course. However, I don't think that's a problem because I think we're going to new highs. So one day at a time. We'll see how the week comes. We know that we have to be open to seeing one more pullback, but if the market is going to just start to price in this Fed pivot, then perhaps this is just going to blast straight out of here. Either way, we've been patient long enough. We've got a line in the sand, so we know what we're going to be doing. Gold looks to have potentially formed an early cycle low, so going to continue to push this trade. Hopefully we can get rejected at resistance, and if we don't, we will flip long at a breakout of the downward sloping blue trend line. Here's Bitcoin. Again, a little bit more patience required because we are still quite far from the cycle low. I don't think Bitcoin, this is 46 days. So I think most likely we've got another week and a bit. We'll get to the end of the first week of November, and then I think we can actually start to form a cycle. That remains to be seen. Perhaps this is going to get true direction after the Fed meeting in November, on November the 2nd. Ethereum, same deal, up a little bit, down into the cycle low and go. XRP, long and strong, continue to push. I'm sure this is going to work its way out of here soon. Zcash looking to add a first position tucked away on that cycle low for Bitcoin as well. MATIC still kind of hanging around. It's not really doing much, but again, maybe a little bit more time and this can go as well. Getting very close. I think it's almost time to go. A little bit more patience, maybe even as early as Monday or Tuesday. So looking to buy pullbacks, aggressively. All crypto stuff, looking to wait just one more week and then we can start scaling in. And then I think it's time to get long and strong and join what is going to be the most hated rally you have ever seen. Ladies and gentlemen, I'm your boy Camel. If you found value here today, I'd appreciate it if you could drop a like on the channel. Subscribe if you're not already. Make sure you have the notifications turned on if you want to see me enter these trades in real time as they present. In the meantime, enjoy your weekend. Look after yourselves. All the best from me. Take care. Cheers. Bye.